How's it going, everybody? It's Stas here. Welcome back to another video. So in today's video, we're going to be doing an overall market update, taking a look at the Dow Jones, the S&P 500, and the NASDAQ. We're also going to be doing a trading update, talking about what I personally did today in the stock market. And let me tell you guys, a lot of activity on my end here in the stock market throughout my different portfolios. And I also want to share with you guys some stocks and ETFs that I'm not already in right now, but I am watching, and I see a lot of value in these stocks and ETFs here towards the end of January, heading into the month of February in 2020. And fun fact today, guys, with the markets being down so much today, and they're continuing to drop heading into the close of the market today, which is in about 10 minutes, this marks the biggest drop in the S&P 500 since back in the October months, which was this drop right here. And do you guys remember me mentioning this in the past couple of videos? The market is in need of a pull down of this magnitude, around 3 to 5%, and it seems like that is what we're starting to see here. So that is what we're going to talk about in today's video: my mentality, stocks, ETFs I'm watching, trades, and kind of what has caused this market to drop. So if you guys enjoy this video, simply go down below for me and hit that like button, and also consider subscribing to the channel if you want to see further content for me, and join our Discord group chat and Facebook group down below, and claim your 2 free stocks from Webull valued up to $1,400 with a deposit of $100. That is linked down below in the description box. So without further ado, guys, let's get into it, and let's break down here the S&P 500. Then we'll talk about kind of the updates regarding this coronavirus and the fear it is causing out there in the stock market, and how it could actually affect individual businesses, and which individual businesses it has affected thus far. So the S&P 500 today is currently down 52 points, down 1.57%. And the reason why I said about a minute ago that we may actually see this 3 to 5% correction now, or not even a correction, a little pull down, is because today, with that 1.6% drop that it just got to now, we actually broke that 50 SMA. And notice how since the previous little drop we've seen, that 50 SMA has been a support, and that has really stemmed over the past 3 to 4 months at this point. So the fact that we broke that, and we're continuing the downtrend, it seems like, here on the daily chart heading into the close, that leads me to believe here the S&P on a technical basis has a pretty good shot here, especially if the fear around this virus continues. You know, it has a good shot to get down maybe to 32.15, which is the next support here. And I'm thinking if it breaks that level, guys, that's going to be pretty worrisome, at least from the bullish perspective here, because it has more room to drop down to, yes, like I mentioned a couple videos ago, that 180 SMA here on the 6-month chart, which could put the S&P maybe around 3150, which is in that range of that 3 to 5% pull down, more towards the higher range of that 3 to 5% pull down from this all-time high at 33.37. And I personally think that would be a fantastic point in time to potentially buy the dip on the market and load up on some longer-term ETFs. And honestly, spoiler alert, I'm going to share this with you guys later, but I'll mention it now anyway. I have bought some ETFs here today for my long-term portfolio, and I do plan on buying it, continue to buy if it continues to fall down here. So before we go into the Dow Jones, the NASDAQ, let's talk about what is going on here with the coronavirus. So the coronavirus has infected more than 2,700 people and killed at least 80, mostly in China's Hubei province. We've talked about this, and this is, these numbers are current as right now. I'm sure tomorrow, the next day, we'll have to update and talk about the numbers as of then, but now these are the numbers numbers that I'm looking at, and I've been getting a bunch of comments, and I've been looking out there and doing research myself that a lot of people have been saying China's trying to kind of hide the numbers of deaths and the number of people that have actually been infected from this virus. But I don't know. Honestly, guys, I don't know. It's up in the air, in my opinion, what's going on. Is some shady stuff going on? Who knows? Drop a comment down below. Let me know your thoughts on that. But as of now, and I kind of mentioned this yesterday as well, the number of U.S. cases has risen to 5, and the government is working to evacuate American citizens from the epicenter over in China, where I believe that's where this virus is stemming from, right? So another point here, Beijing has brought in the extraordinary quarantine to more than 50 million people, but the mayor of Wuhan, the outbreak's epicenter, said 5 million people have already left the city. This is huge, guys, because these people weren't contained. That means the virus now is leaving the epicenter. It's going to other places in China, which is not good. That means it's starting to spread, and it could get to other countries, which I'll show you guys in a minute or two here. All the countries so far that I've seen that have been infected, and that's how it's spreading, right? And China's health minister said the coronavirus is increasing in virulence and now could be contagious even before people exhibit symptoms, making apparently healthy people possible carriers. A scientific assessment of the spread of the disease, assuming an optimistic 90% quarantine, still predicted more than 59,000 infections and 1,500 deaths, twice the toll of the 2002-2003 SARS, I'm assuming that's SARS, outbreak, which I personally, to be honest, don't know too much about that, but I'm sure you guys can do further research on that. And the U.S. Centers for Disease Control and Prevention said on Monday there were no new confirmed cases of the coronavirus overnight, but that it is investigating 110 people in 26 states. So for the U.S., there's been 5 infections or viruses confirmed that people have been infected, like I mentioned a minute ago. And there have also been confirmed infections in France, South Korea, Japan, Nepal, Thailand, Cambodia, Singapore, Vietnam, Taiwan, Canada, and Sri Lanka, guys. So this is getting really, really crazy now. And back to that kind of bigger drop that we've seen since October, another fun fact here, the S&P 500 hasn't closed up or down 1% in a single trading session since mid-October, one of its longest such streaks since 1969. That's incredible, and you can see it here in the price action, right, guys, on the 20-day 1 hour, not even on the 20-day 1 hour. Let's go to the 90-day 2 hour chart, which is a 3-month chart. Take a look at how kind of steadily and calmingly the market has been pushing up with minimal pull downs. That's pretty impressive, right? And again, now with this 1.5% pull down, obviously this is the first time since October. So before we get too much on a rant here with the virus, let's talk about what the Dow did very quickly, which pretty abysmal day on the Dow, down 433 points right now, down 1.50%, and just like the S&P 500, it broke that 50 SMA, and now I can see it maybe filling the gap down to about 28,500. Or not 28,500, rather 28,150, which would put us at old resistances as a new support, as well as on top of that 180 SMA on the 4-hour chart, which would put it into that healthy little pullback range of around 3 to 5%, like we mentioned a couple videos ago. So it's getting killed, guys, just like the S&P, and the NASDAQ saw the worst of it. The NASDAQ is down 2% right now, down almost 200 points, and the futures are back into the $8,000 territory, but the good thing is we still have yet to break that 180 SMA, so the bulls still have hope here, and this is kind of where I'm looking for the NASDAQ to hold, right? At a higher low, at the end of the day, if it holds this, guys, it's still in an uptrend, and we could potentially buy the dip here on some of these inverse leveraged ETFs that I've been talking about here on the channel, like ticker symbol TQQQ, which goes up whenever the markets are going up, in particular the NASDAQ. So overall, guys, that's kind of the market update for today. A lot of fear, a lot of uncertainty, a lot of businesses have been shutting down operations. There hasn't been a lot of activity over in China with their Lunar New Year, and this is a busy time period over in China from my understanding, right? And a lot of businesses, they're seeing some pressure from this. We'll talk about now some of those businesses. Actually, let's talk about what I did very quickly today, and then we'll talk about those businesses. So for me, I traded nothing really today in terms of day trading. Typically, when there's a lot of volatility, I like to day trade, but I didn't really see that opportunity today, and when I don't see an opportunity, I don't like to force it. So what did I do? I actually ended up buying a little bit of Uber today. Uber stock is one of those, and I'm sure many of you already know this at this point, but it's one of those stocks that I've been recently swing trading in and out of like crazy. I've been buying since 28, sold some at about 33, bought more at 34, sold some at 36, bought more here, sold some on the rally up to 38, and recently, about 2 days ago, I bought more at around 37.15, 37.20, that general area, and as many of you guys saw today with Uber stock, it went down to 34 bucks. So did I cut my losses on those shares? To be completely honest with you all, no, I did not. And the crazy thing is, I was down about 7, I believe like 6-7% roughly on those shares, but I wasn't too heavily, exposed to Uber, right? And that's the beauty of scaling into the swing trades, scaling into your positions, because let's say I was in with 100% of my position at around 37.12, I would have got crushed down about 7% on a full built position. That wouldn't have been good. But the fact that I was down still 6-7% on that buy at around 37.20-ish, I wasn't too phased from it because I was only in with around 20-30% of my goal position. And the reason is because if it dips, I could add more if I want to, right? And that's what I ended up doing today. It dipped all the way to 34.19, did not buy down here, but I did end up adding just a little bit more to Uber. I believe it was around like 36.08, right around this level of support. So I see it, or rather I saw it break that level right around 36 bucks. And if we zoom out to the 4-hour chart, we'll be able to see that is a strong level of support. So I figured why not add a little bit here. We also held that 50 SMA on the 4-hour chart at a higher low, and that gave me some more conviction to get into Uber, or rather to add a little bit more to Uber. So that's really what I ended up doing. So in terms of my swing account, my trading account here, short-term trading account, I'm being patient and I'm looking to actually buy some more tomorrow, depending on what the trend looks like and depending on kind of how the markets in general are looking like, revolving this huge virus that's pushing, again, a lot of fear and a lot of volatility into the markets. And the reason why I didn't buy anything else today is because I'm kind of risk managing against the further downside that these markets have. I don't want to be too kind of jumping the gun with it. Again, I added a little bit of Uber, but I just feel comfortable waiting until tomorrow here, see what the markets look like in the morning. And let's say we're rallying back up. Maybe that could be a time to enter on a more confirmed basis that the markets, at least from a technical perspective, could be pushing back up. But until then, I'm just sitting and being patient here. But on my long-term portfolios, in one of my long-term portfolios, being this M1 Finance portfolio, you'll see a screenshot here. Nothing too crazy, but I did end up scaling in with about 200 bucks into these positions here: 3M, VEA, Amazon, SPHD, Disney, ticker symbol O, as well as Wells Fargo, ticker symbol WFC. And with this portfolio, guys, the focus is not getting in and out every single single week like I do in my trading portfolio, but it's to build a long-term portfolio with companies that have strong economic moats that I believe in for the long run, and ETFs, that is, because there are two ETFs that I bought today, and these are just, instruments that I just truly believe in 5, 10, 15 plus years from now, and that I want to provide cash flow for me through dividends. That's kind of what this portfolio is based on. So that is what I did today in terms of my trading. If you guys did anything, buying, selling, long-term portfolio investing, any buys there, let me know down below in the comment section. I'd love to know what the community has been up to in the craziness here. And that's what this is, guys. It's craziness. And many of you that maybe have just started in the markets over these past couple of weeks, if you have, drop a comment down below. I'm actually super interested in how many beginners I do have here on the channel. But if you are one of those beginners, you haven't really seen a dip like this, right? Again, the previous time was back in October, back in September, and one of the bigger dips that we've seen in history, and in recent history that is, was back in 2018. So this is nothing compared to what happened back towards the end of 2018, just to give you guys a little bit of perspective. So without further ado, I know this video may be a bit long, but I know you guys do enjoy the content here. And by the way, if you do, hit that like button, drop a comment, subscribe to the channel if you want to see further content from me. Now, let's talk about these Chinese businesses and the USA businesses with China exposure that got crushed today. Starting off with, very quickly, Luckin Coffee, ticker symbol LK. Then we'll talk about the next one, then the next one, then the next one, right? So LK here, from 51 bucks, it fell all the way down to about 37 bucks. It had a 10% sell-off on Friday, followed by another 9% sell-off today. So this stock, like many of the other Chinese stocks right now, it's gotten crushed, guys. 25% down over the past couple of days. And the truth is, no one knows how long these Chinese stocks and the stock market in general is going to be under pressure. But for me, I'm still watching this 180 SMA on the 4-hour chart to see if it holds at a higher low. In the case that maybe this virus does blow over, or maybe the investors and traders out there start buying up this dip regardless of the craziness surrounding the virus. And with these types of things, guys, the truth is, you just have to wait and see. No one has a magic 8-ball. No one has a crystal ball where you can see the future. You just have to wait and see how these, technical levels react. If people start buying this dip, yeah, there could be a lot of potential here in LK, as it's been quite a hot stock, it seems like, ever since it reported its previous earnings report. And from a slight glance here, it seems like they're trimming their losses quarter over quarter, which is good for any business out there. You can see EPS a quarter ago was negative 48, and the previous quarter before that, or rather after that, it came in at 32, negative 32. So they're still losing money, but they're trimming their losses, which investors and traders out there love. And in my opinion, that's kind of what from a very just general metric perspective, that could be what is pushing up LK here. Another stock is going to be Alibaba, ticker symbol BABA. This one's down not as much as LK, but it's down 4% right now, down $8 on the day. We broke that 180 SMA technical area that we were talking about in previous videos, and that general $210 area as we're trading now in 205. And I warned you guys about these Chinese stocks a couple days ago, with the fear, with more, evidence, more cases, and the virus spreading here, it's very dangerous holding these Chinese stocks. Not holding them long term, but it's very dangerous in my opinion. Of course, you can do whatever you want, but it's dangerous to be scaling in right now, in my opinion. There is a lot of risk, but again, if things blow over, there could be a lot of potential as well for Alibaba and these Chinese companies in general. Another one is going to be JD, ticker symbol JD, and this is JD.com, one of the e-commerce, players out over there in China. And this one was down 4.8%, down $2 today from 42 bucks, the high just a couple days ago, all the way down to where it dropped at about 36, 37 bucks. That was a drop of 13 to about 14%. And the good thing here, kind of like LK, is JD is holding that 180 SMA on the 4-hour chart and giving me hope that people might be buying up this dip. So definitely keep an eye out for this one. NIO is another one that took a pretty big hit today, down 65 cents, down 13.95%. And the positive thing here is, despite we broke the EMA, the 50 SMA here on the 6-month chart, the positive thing is we are, technically speaking here, still holding a uptrend, and we're holding that general $4 area, which I'm hoping it holds, because if it doesn't, guys, there could be some downside, technically speaking, here to maybe 375, maybe even back down to 350 on top of that 180 SMA. But watch for it to hold $4. This could open up an entry maybe from $4 up to about $4.40 to maybe $4.50. Now, let's talk about some USA businesses with a lot of China exposure, and this could really affect these businesses if people stop consuming products over these next couple of days. Although those numbers may not be too crazy in terms of affecting earnings, it's still going to affect the stock prices at the end of the day, at least in the short term, right? And one of those is going to be Apple, ticker symbol AAPL. They obviously have a lot of exposure in China. This one ended up going down 3%, down almost $10 per share today. And this is kind of refreshing, to be honest, to see Apple down for once, because like I said, the S&P's been roaring, and guess what? Apple's been roaring as well, with minimal, I'm talking minimal pull downs over the past couple of months. I guess this might be the biggest pull down. Don't quote me, just from my bare eye here. This may be the biggest pull down over the past couple of months since this July pull down we saw when Apple went from 220 down to about 190. Now looking back, what a buying opportunity that was, guys. But I'm not too sure if this is as good of a buying opportunity, obviously, since the stock has rallied up over 130 points since that pull down. Another one that got hit today was Disney, down $4.18, down 3%, which is why I did end up adding a bit more in my M1 portfolio. And Disney, although they don't have extreme exposure in China, they do have exposure in China. They closed their Shanghai, park for the Lunar New Year from the last update that I've heard. And that ended up tanking the stock on Friday, heading into today. And now we're actually holding, which is a good short-term sign here, we're holding a technical level at about 135 to about 136 bucks. But keep an eye on this, guys, because if we do break that, maybe 134 could be next, maybe even the lower 130s. And heading into earnings, this could definitely end up pushing the price, fluctuating the price either up or down. And with how much the stock has gotten crushed, I'm not sure if it could fall much lower after earnings, unless the earnings are just horrible, right? And I don't really think earnings for Disney will end up being horrible, but of course, we're going to have to wait and see what does end up happening. So a company that actually has a good amount of exposure to China is Wynn Resorts, guys. Their Macau location is what's really dragging this down, because what is their casinos, their resorts, what are those places, guys? They're public places where viruses can spread. And people in China, they're staying home more now. They're being more contained because obviously they're scared of getting this virus. They're scared of getting sick, infected. They're scared of dying. And that's pushing down this stock because, again, they have a location over in Macau. A lot of business is there. And the stock has been down, or is down rather, right now, $11, down 8%. And this is more of, I think, a dividend play. Off the top of my head, I'm not too sure what their dividend is, but with how much it's been dropping here, this could open up some sort of value, maybe even a dip buy on a swing opportunity for those that do find Wynn Resorts attractive. And technically speaking here, guys, although it is looking like a falling knife, it's looking pretty abysmal, to be honest. It's still holding this overall uptrend on the 4-month chart, or rather the 4-hour chart. So that is a pretty solid sign. So another stock that got hit today, from the USA side is American Airlines, ticker symbol AAL. And this is mostly because travel, again, same thing with when resorts, people are not looking to go and commute and travel and fly out because public places, viruses spread, etc. So airlines, they got crushed today, mostly American Airlines here, ticker symbol AAL. And there's a bunch of other stocks here that I want to share with you all. And as you can imagine, many stocks got crushed today. AMD was another one of those, down about 2%, not as bad as the other ones, but for me, any dip on AMD, especially with how crazy its rally has been, you have to consider it as a potential dip buy. And that's kind of how I'm looking at this. We hit $53 nearly. We pulled down this morning down to about, what was it, like $48. And we've actually closed on a pretty solid note here, in my opinion. And that's a good sign that in the short term, at least, AMD might be looking to recover and break out. So for me, I'd need to see a break back into $50 to even consider, ticker symbol AMD. And the next one here, which is one of those stocks, like I mentioned yesterday, I said, tomorrow, in terms of yesterday, I was like, tomorrow, the market, many stocks, most stocks will be red. And there's going to be a couple that are either break even or even green. And SQ Square Inc. was one of those stocks that was actually break even today, pretty much, down 0.13%. We actually hit a high at about $72.45 today, which is strong. And you guys know that I'm actually already in Square at around $71.20, I believe, roughly. So I'm kind of break even on my position, and I do plan on swinging it from around $71 up to about $74.50-ish cents, maybe even $75. So another one of those very few stocks that did well today was Beyond Meat, ticker symbol BYND. And this is actually one of the hottest stocks, at least today, up 4.4%, up 5.26. I don't know why I said it like that. $5.26 on the day. So right now with Beyond, it's at a funky spot, right? We broke above 124, ended up holding that level at the close, which is good, but we're kind of in this range where we've been seeing a lot of selling pressure, and this range is just a general resistance, being around 130 to around 135. And you guys can see, it seems like people actually sold Beyond Meat. There was a bit of selling pressure there. Today, actually, at around 12 p.m. Eastern Standard, we saw a double top and then a little bit of a sell-off there. So that just goes to show that people are locking in their profits up there at around 130 to about 135. So for me, I need to see a definitive hold above 125 tomorrow, and from there, maybe we can rally back up to 130, 135. That could be the play on Beyond Meat here in the short term, but ultimately, I'd love to get in above 135 and maybe ride it up to about 140 to about 142 bucks, which is this general range that I'm looking at. So 3 more stocks, guys. These are actually 2 of these 3. They're reporting earnings this week. One of them is going to be Facebook. Facebook's looking pretty solid on a technical basis, holding around 212, 214, this general area of support. So for me, I like Facebook between 214 and 220, but the fact that they are reporting earnings here on the 29th, I'm not looking to buy before because I don't really like gambling through earnings. I'm looking to see what those earnings are. Guidance, do they beat? Do they kill earnings? Do they suck in terms of their earnings before I make my decision on how I want to trade Facebook? So the next one is going to be Tesla. They're reporting earnings here, I believe, on the 29th as well. And they were down about $7 today, down 1.2%. And overall, Tesla's momentum is remaining strong to the upside. We're holding that 50 SMA, this green line on the 4-hour chart, at a higher low as the price action confirmed today. And we're actually breaking out of this overall downtrend on the 5-day, 5-minute from these past 3 days, which is really, really good in my opinion. So Tesla, again, I'm not buying this before earnings. I'd rather see what ends up happening after because I'm scared. Let me tell you guys one reason. I'm scared because Tesla, I feel like it's pricing in such a massive, or it's not even pricing in a massive earnings move right now. I feel like there's just so much already priced into the stock that, if their earnings are subpar, I feel like the stock could end up dumping like crazy. That's kind of what I'm scared about here. They have to kill earnings for the stock to continue up. If they miss on any numbers, anything bad happens, this could definitely drop back down to maybe 500, 450, which is kind of what I'm scared of right now with Tesla, and why I'm not even going to buy before earnings. Not like I do anyway, but just figured to put that out there. So the last one that I want to talk about is Netflix, guys. Ticker symbol NFLX. This one is setting up perfectly for tomorrow, in my opinion, if it proves to hold 340 in tomorrow's session. Today, down about $10.28, down about 2.91%, and overall, we are holding that 4-hour 50 SMA and the general 340 level of support heading into the close, which is really, really good. And Netflix, they crushed earnings last week, so I do expect momentum to continue here. Momentum, that is, to continue here to the upside, especially if these markets in general do recover. Sure, if the markets end up getting crushed, of course, Netflix, being a large cap company, it most likely will get crushed as well, but I'm hoping these markets recover, they stabilize a bit, then we'll see some entry points in some of these large cap companies like Netflix, companies that I believe they do have some head of steam ahead of them. So overall, guys, that is it for the video. Hope you guys enjoyed it. If you did, go down below for me and hit that like button. And also consider subscribing to the channel if you want to see further content from me. And if you haven't quite yet claimed your 2 free stocks from Webull valued up to $1,400, the affiliate link is linked down below in the description box. All you have to do is put in $100 and you get 2 free stocks up to $1,400. No strings attached, and that supports me and all the free content that I'm putting up here on YouTube. And I do appreciate all of you guys out there that do support me, that do watch the videos. It means a lot to me, guys. So I'll catch you all in the next video. Thanks again for watching. As always, peace out.